Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at LM Funding America.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave it in the comment section below.
So let's get into the analysis of LM Funding America.
Okay, where do we start? The story here seems pretty dramatic.
It is. The main thing to understand is a massive strategic pivot. The company has completely shifted its focus.
Right, away from their old business model.
Exactly. They are now all in on a Bitcoin treasury and mining model, and that pivot is causing, well, a significant valuation disconnect in the market right now.
And that disconnect is really the whole story here, isn't it? It's the core of the investment thesis.
It absolutely is. So get this. As of late November 2025, the stock was trading around, what, $1? $1.10?
Yeah, in that range, so pretty low.
Right. But the company holds about 301.8 Bitcoin in its treasury.
Okay, so over 300 Bitcoin.
Yeah.
And if you value that, what does that actually come out to?
Well, at the time, BTC was around $91,100 a coin. So that treasury alone is worth approximately $27.5 million.
$27.5 million. Wow.
And here's the kicker. When you translate that $27.5 million into a per share value, it stands at about $2.25 per share.
Wait, say that again? $2.25 per share.
Yep. So you have a stock trading at less than half of the value of its Bitcoin holdings alone.
That's a fundamental cushion for investors, to put it mildly. It's like the entire mining operation is being valued at less than zero.
Precisely. So the natural question is, okay, is the mining business actually delivering? Is it just a money pit?
Exactly.
Yeah.
Because that discount would make sense if the operations were terrible. But they're not, are they?
Not at all. We've seen really strong expansion in the top line. Q3 2025 total revenue was $2.18 million.
And what's that in terms of growth?
That's a massive 73.5% year-over-year jump. And it's not just luck from better Bitcoin prices.
Right. It was fueled by the incremental hash rate from that Mississippi facility acquisition they made. They're actually growing the operation.
Yes. And what's maybe even more impressive than the revenue growth is the margin expansion. This shows it's not just growth for growth's sake.
Okay, so how are the margins looking?
They've been climbing consistently. Mining margin was 38.5% earlier in the year, then 41% in Q2, and it hit 49% in Q3 2025.
Almost 50%. That's a huge deal. It shows their scaling and their power strategy is really working.
It is. The core mining activity is now, materially profitable at the gross level.
And that high mining margin is key, right? Because it shows operating leverage is starting to kick in.
That's the whole point. In fact, Q2 2025 actually generated $2.6 million in core EBITDA.
Which confirms that the new mining capacity, even at current prices, is positively contributing to cash flow. The machines are making money.
Yes. So we also need to talk about their strategic use of capital. They're not just spending.
Okay. In 2025, they raised about $21.3 million to build up this treasury and fund the expansion.
They did. But critically, they also authorized a $1.5 million share repurchase program.
Now, in a microcap context, that's a huge percentage.
It's massive, and they've already bought back over 3.3 million shares. It's a very clear signal.
A signal that management sees the stock as deeply, deeply undervalued relative to that Bitcoin net asset value we just talked about.
You got it. It's a mechanism specifically designed to reduce dilution and structurally raise the Bitcoin and asset value per share over time.
Okay, let's talk about their competitive edge. The sources mentioned something about managing power costs.
Yeah, this is really interesting. They've proven they can curtail mining operations during high power spikes and sell that energy back to the grid.
So they turn a risk, high power costs, into a revenue stream.
Exactly. In November 2025 alone, they generated $76,000 from these curtailment and energy sales.
That's a clever way to hedge against energy volatility. And what about efficiency on the mining side?
They're serious about it. The acquisition of that 11-megawatt Mississippi facility gave them substantial scale.
And I saw they have a 2-megawatt immersion expansion in Oklahoma, right?
Yes, and it's on schedule to be energized by the end of December 2025. This is a big deal because it uses highly efficient immersion-cooled miners.
So better tech, better cooling, better output.
And it's expected to increase their total hash rate by nearly 10%.
So that Oklahoma expansion is probably one of the biggest near-term catalysts we're watching.
Without a doubt, that commissioning announcement, which should be coming any day now, will feed directly into better monthly production numbers.
And then the next big formal checkpoint will be the Q4 2025 earnings update,
Hmm.
probably around mid-February 2026.
Yes. Okay, but we have to address the risks for balance here. It's not all upside.
Of course, while the core mining is profitable, the company is still reporting GAAP net losses, right?
They are. Q3 2025 saw a net loss of $3.7 million. The total net margin for the trailing 12 months is still negative 183%.
Which means they're still burning cash to scale up.
Hmm.
And if the market gets skeptical, they could face dilution risks down the road.
That's the primary operational risk. The other major risk is, of course, Bitcoin itself.
The volatility. This is a highly leveraged play on Bitcoin.
A very high leverage. It has a beta of around 1.85.
So if Bitcoin's price were to drop significantly,
Yeah, it would compress their mining margins, it would mark down that $27.5 million treasury value, and it would erode that valuable NAV cushion. It cuts both ways.
sure. But the counter-argument here is that because the equity is already trading so far below that Bitcoin-backed value, a lot of that bear case might already be priced in.
I think that's fair to say. You have improving operational efficiency, you have a strong share repurchase program, and clear steps toward greater scale.
And the consensus models for this stock, they do project substantial upside over the next year, don't they?
They do. They suggest there is constructive forward momentum expected based on the asset base and that growth trajectory.
So to wrap things up,
In summary, LM Funding America provides this unique, leveraged exposure to Bitcoin. It's trading at a deep, deep discount to its tangible assets.
which makes it a high beta vehicle, but one with strong operational catalysts coming online in the next few months as that new infrastructure comes on.
It's definitely a fascinating setup.
It is. If you found this analysis useful, remember to subscribe, like, and share Smart Wealth with Joshua so you don't miss our next stock analysis.